the next topic is death of a partner. When a partner dies, he leaves the firm forever. Therefore, it is treated as permanent retirement. When a partner dies, his representatives or the executors of his estate are entitled to all the rights which have been shown in respect of the retirement of a partner. There are a lot of similarities between death and retirement. Accounting treatment are more or less same. The only difference is the date of retirement is certain. He may wait till the retired partner may wait till the closing date of the accounting year. But death is uncertain. Without notice, death may occur any day. And so the representatives of the deceased partner will be entitled also to the shares of the profit earned from the beginning of the year to the date of death. That means beginning of the year is 1/1/2020. If he dies on 31st March 2020, deceased partner legal representative is entitled to get a 3 months profit, get a share of deceased partner's 3 months profit. Okay. Death of a partner dissolves the partnership, but the surviving partner generally carry on the business by purchasing the deceased partners. In the event of death, the legal representatives of the deceased partner will be entitled to get from the firm the amount due on account of the following. Example, capital account of the deceased partner is credited with a share of the following amounts. What are the amounts that should be credited with the capital account of the partners? A deceased partner, let's see. Capital standing to the credit of the deceased partner, then share of goodwill, share in the profit of the firm earned from the beginning of the year to the date of death, profit on revaluation of assets and liabilities, share of accumulated profit and losses, share of proceeds of joint life policy, interest on capital from the beginning of the year to the date of death, then salary due. Okay, these are all the particulars or items to be credited with the capital account of the deceased partner. His legal representative is entitled to get all these things. Okay, capital, share of goodwill, share of profit, profit on revaluation, accumulated profit, proceeds of joint life policy, interest on capital, salary due. Mode of payment. The partnership firm has to settle the legal representatives of the deceased partner. How they are going to settle the amount? There are various ways. One among the ways is lump sum payment method. If the firm has sufficient cash to pay the amount due to the deceased partner, it can pay the amount immediately, and this is known as lump sum payment method. So, lump sum payment, if a partner capital account stood at 1 lakh rupees, deceased partner capital account, if the firm has sufficient money, it settled the whole 1 lakh rupees immediately to his legal representative. This is lump sum payment method. The journal entries we have to pass is, first we have to transfer the balance in deceased partner capital account to the legal heir or the executor's account. The entry would be deceased partner's capital account debtor to executor's account. Then the next step under the lump sum method, they settle the executor immediately. So debit the receiver, the executor account debtor to bank. These are all the journal entries we have to pass while settling the executor's account under the lump sum method. The second method is installment payment method. When a firm is not in a possession of sufficient amount for making payment to the executor of the deceased partner, it can pay the amount in installment. In such a case, the total claim is first to be transferred to the executor's loan account, and all payment by installment are recorded in this account. Payment may be made as per terms after charging interest on the amount due. Payment is made against unpaid balance with interest in the following manner. See, if they don't have sufficient money, they prefer installment. So, as per the agreement between the existing partner and the legal heir of the deceased partner, they will fix the terms and conditions of installment, rate of interest and number of installment and all. How they are going to pay? Let's see. In two ways, they settle the deceased partner's legal representative account under the installment payment method. First one is decreasing payment method. In this method, the total amount due is divided by a number of equal installments and the installment amount along with the interest is paid accordingly. Here it is decreasing payment method. That is why the amount is year by year decreased. From one installment to another installment, first installment and the second installment amount is lesser than that of the first installment. That is why it is called decreasing payment method. Here equated installment method. In this method, the total amount due is divided into number of equal installment in such a way that the amount of each installment including interest should always be equal. Okay, here the equal amount is given. Every installment the firm pays the equal amount. Here unequal amount, it is decreasing. Third method is annuity method. Payment may also be made by annuity. If it is so, accounting record will be the same as in the case of payment by annuity in retirement. Items which require special treatment. The accounting treatment in case of death of a partner are the same as in the case of retirement of a partner. But the following two items require special attention. First one, ascertainment of deceased partner share of profit, treatment of joint life policy. We have to ascertain or calculate the deceased partner share of profit because the date of death is uncertain in the middle of the year or any day, any time. It is uncertain. Okay, we cannot fix the date for the death. Okay, so without giving notice, he was died, and so we have to ascertain the deceased partner's share of profit. This is the main difference between the retirement and the death. Okay, then treatment of joint life policy. First accounting treatment is ascertainment of deceased partner's share of profit, time basis. In order to calculate the share of profit of the deceased partner from the beginning of the accounting year to the date of the death, the previous year profit or average profit of the past 3 or 4 years is taken as base. How we are going to calculate the deceased partner's share of profit? Because if he dies 31st 12 or 31st March, it is very easy for us to calculate his share of profit because this is the closing date of the year, accounting year. If it is 1/1 to 31st 12, if it is 1/4 to 31st 3. But if he dies, it is not possible. Okay. It may not be happen, and so he may die any period, that is 1-2 he may die, or 15-4 he may die, any date of the year between 1-1 to 31st 12 or 1-4 to 31st March he died. And so how we are going to calculate the deceased partner profit? We have to consider the previous year profit, or previous year means last year. If it is 2022 current year, the previous year is 2021. Okay, previous year profit may be taken as base, or average profit of the past 3 or 4 years is taken as base. When the previous year profit is taken as base, it is assumed that the profit during the previous year has been earned uniformly in all the months during the year. If the profit of the previous year is 12,000 rupees, we have to assume that every month the firm earns 1,000 rupees. This is the assumption. Whatever base may be taken, it is multiplied by the period for which the deceased partner remained in the firm, and also by his profit sharing ratio at the time of his death. This is the formula for calculating profit on the basis of time. Profit from the date of last balance sheet to the date of death. Number is equal to number of days or months from the date of last balance sheet to the date of death divided by 365 days or 12 months into average profit of given number of past years. This is the formula to calculate the deceased partner profit on the basis of time. We can even calculate the deceased partner profit on the basis of sales. The balance sheet, the share of profit of the deceased partner from the date of last balance sheet to the date of death on the basis of turnover, the following information is required. If we follow the sales basis, we need two information. First one is sales of the previous year. Second one is sales up to the date of death. Last year sales and sales up to the date of death. These two information are essential to calculate the profit of the deceased partner on the basis of sales. Under this method, the previous year profit or average profit of past 3 to 4 years is divided into two portions, before the death or after the death on the basis of turnover ratio to the date of death to previous year sales, and then decreased partner share is calculated and credited to his capital account. You will understand when we do the problem. Formula calculation of profit on the basis of turnover. Turnover means sales. This is the formula to calculate a deceased partner profit on the basis of turnover. Profit from the date of last balance sheet to the date of death. Sales from the date of last balance sheet to the date of death divided by previous year sales or average sales of given number of past years into previous year profit or average profit of a given number of past years. This is the formula. Next one is question for calculation of profit on the basis of turnover. For instance, there are three partners named Vignesh, Ganesh and Murugan. They share profit and losses in the ratio of 2:1:1. Murugan dies on 15/3/2022. Sales from 1/1/22 to 15/3/22 is rupees 1,20,000. Sales for 2021 is 4,80,000. Profit for 2021 is 96,000. Calculate Murugan share of profit on the basis of turnover. So we need three information. Previous year sales, then sales up to the date of the death. Okay. Then with the help of these information, we can easily calculate the profit of the Murugan. Murugan is the deceased partner. They are sharing profit and losses in the ratio of 2:1:1. He dies on 15/3/2022. Then that is what is the formula? Sales from the date of the last balance sheet to the date of death. Last balance sheet, that is 1/1/22 to 15/3/22. The sales is 1,20,000. We are going to calculate a profit up to the date of his death. The date of his death is 15/3/22. Sales for the previous year. Previous year is 2021. That is given 4,80,000. Previous year profit is 96,000. Previous year profit and previous year sales both are essential to calculate the profit of the deceased partner under the turnover method. So 1,20,000 sales up to the date of death divided by sales for the previous year into previous year profit, we will get 0.25 into 96,000. If we multiply 0.25 with 96,000, we will get 24,000. This is the total firm profit from 1122 to 15,322. See, out of this total firm profit, we have to calculate Murugan share. Murugan share is how much? 1 by 4. So, 24,000 into 1 by 4 is 6,000 rupees. This is question for calculation of profit on the basis of time. ABC were partners. C died on 20th February 2015. His share of profit from the closure of the last accounting year till the date of death was to be calculated on the basis of the average profit of 3 completed year before death. We may take either the previous year profit or average profit. So, the average profit 3 previous, that is preceding year is 2012, 2013, 2014. The profit of 2012 is 1,10,000. 2013 is 1,32,000, 2014 is 1,54,000. Calculate C share of profit till his death and pass the necessary journal entries for the same. We have to calculate share of deceased partner and we may also have to pass journal entry. First we have to calculate the average profit. 3 years profit is given. So, 1,10,000 plus 1,32,000 plus 1,54,000. The total of 3 years profit is 3,96,000. If we divide this profit by 3, we will get 1,32,000. So, 1,32,000 is the total profit from 1st January to 28th February. So, this is the total share of the firm's profit. From this, we have to calculate 2 months profit. So, the 2 months profit is 1,32,000 because he died. He was alive only 2 months. So, his legal representatives has got the right to get only 2 month share of profit. So, that's why we have calculated here is 2 months total profit of the firm. So, total profit of the firm is 1,32,000. If we multiplied with 2 by 12, we will get 22,000 rupees. This is the 2 months profit of the firm. This is the 2 months total profit of the firm. We have to calculate the C's share of estimated profit is 22,000. The C's share is 1 by 3. So, his share of profit is 2 months profit is 7,333. So, the journal entry we have to pass is P&L suspense account data 7,333 to C's, that is he is deceased partner. So, C's capital account 7,333. One more question. We are going to calculate the deceased partner's profit on the basis of sales. D, E, F are partners sharing profit in the ratio of 2:2:1. E died on 31st March 2011. Accounts are closed on 31st December. Sales for the year 2010 amounted to rupees 4,80,000. Sales of 1,60,000 amounted between the period from 1st January 2011 to 31st March 2011. The profit of the year 2010 amounted to rupees 48,000. Calculate the deceased partner's share in the profits of the firm. Profit from the last balance sheet to the date of death we are going to calculate. For that, we need 3 information, that is sales from the date of the last balance sheet to the date of the death. It should be divided by previous year sales and it should be multiplied with the previous year profit. Sales from the date of the last balance sheet to the date of death is 1,60,000. Previous year sale is 4 lakh. Here it is given 4,80,000 and it should be multiplied with the previous year profit, that is 48,000. So, we will get 16,000. 16,000 is the total profit. So, from this total profit, We have to find out the E's share of profit. E's share of profit is 2 by 5. What is the ratio? 2:2:1. E's share is 2 by 5. So 16,000 into 2 by 5 is 6,400 rupees. In this way, we have to calculate the deceased partner profit either on the basis of sales or on the basis of time. Then this is the question for preparation of deceased partner capital account. Following is the balance sheet of black, brown and white as at 31st/12/2010. Sundry creditors 2,000, reserve fund 3,200, capital account black 10,000, brown 5,000, white 5,000. So the total is 20,000. Plant and machinery 10,000, stock 4,000, sundry debtors 6,000, cash at bank 5,000, cash in hand 200. The total of the balance sheet is 25,200. This is the additional information. White died on 31st March 2011. Under the terms of partnership deed, the executors of a deceased partner were entitled to amount standing to the credit of partner's capital. Partner capital account. Amount of deceased partner capital. Interest on capital 5% per annum. Share of goodwill on the basis of twice the average of the past 3 years profit. Share of profit from the closing of the last financial year to the date of death on the basis of last year profit. Here we have to consider last year profit. Then here while calculating the goodwill, we have to consider the average of past 3 years profit, twice the average of past 3 years profit. Profits for 2008, 2009, 2010 were respectively 6,000, 8,000 and 7,000. Profits were shared in the ratio of capital. Prepare white account. So balance sheet is given, additional information given. White is a deceased partner. You are asked to prepare white's capital account. First, let us calculate interest on capital of white. White's capital amount is 5,000. The rate of interest is 5%. Why this 3 by 12 is here inserted? Because he lives only from 1 to 31st March. He lives for 3 months. After that, he died. And on 31st/3, he died, and so he was in the partnership from 1/1 to 31st/3, that is 3 months, and so he was eligible, or his legal representative was eligible to get only 3 months interest on capital. So the 3 months interest on capital is 62.50. Then reserve fund distribution. 3,200 is the reserve fund. His share is 1 by 4. That is the white's share is 1 by 4. So 3,200 into 1 by 4 is 800. What is the profit sharing ratio? Profit sharing ratio is equal to capital ratio that is given in the problem itself. Capital 10,000, 5,000, 5,000. That is white, black, brown and white. Black invest 10,000, brown invest 5,000, white invest 10,000. So the ratio is 2:10:5:5. So 2:1:1. The white ratio is 1 by 4. Then goodwill calculation. Twice the average of the past 3 years. Past 3-year profit is given, that is 6,000, 8,000, 7,000. If we add, we will get 21,000. If we divide 21,000 by 3, we will get 7,000. Twice the average profit. Average profit is 7,000. If it is to be multiplied with 2 to find out the twice the average profit. So the value of goodwill is 14,000. White's share of goodwill is 14,000 into 1 by 4. That is 3,500 rupees. Profit basis last year profit. Last year profit that is given in the problem is 7,000. So White's share of profit is 7,000 into 3 by 12, that is from 1 to 31st March, 3 months, 3 by 12, and his profit sharing ratio is 1 by 4. So the profit which has to be given to the legal representatives of White is 437.50. Now let's prepare White's capital account. Then before preparing the capital account, first let us pass the journal entries. Okay. So first one is reserve fund. Reserve fund account debtor to White's capital account. Already we have calculated, that is 800 rupees. Interest account debtor to White's capital account, 5% interest. That also we have calculated, that is 62.50. That should be transferred to White's capital account. Then goodwill account debtor to White's capital account is 3,500. Then P&L transfer, P&L appropriation account debtor to White's capital account is 437.50. Then finally we have to transfer all the amount to his legal heir or executor's account. The total amount is 9,800. That should be transferred to his executor account. For that we have to pass White's capital account debtor to White's executor account. Okay. These are all the journal entries that we have to pass while dealing with the deceased partner's capital account. This is the White capital account. Balance capital is 5,000. Reserve fund 3,200 into 1 by 4 is 800. Interest 5,000, 5% into 3 by 12 is 61.50. Goodwill 14,000 into 1 by 4 is 3,500. Then profit and loss appropriation account 7,000 into 3 by 12 into 1 by 4 is 437.5. The total of the credit side is 9,800. That means the firm has to settle 9,800 to the legal heir or executor of the White's capital account. So White's capital, the White capital account should be transferred to White's executor account. So to balance transfer to White's executor account 9,800. This is the way to prepare deceased partner capital account. We have to first ascertain the amount which should be given to the deceased partner, and we have to total all the amounts, share of profit, share of goodwill, share of reserves, all those things should be interest on capital. If the firm gives salary, that also should be added. All those things should be added, and finally that amount should be transferred to his executor's account, because we cannot make payment to the deceased partner.